Earning money is a skill, but keeping it safe from all pitfalls is an art. And that's how the rich stay rich. Whereas most of us are bothered by the mere concept of paying income taxes, have you ever wondered how the ultra-rich lawfully avoid taxes? They keep their money in tax haven countries. So, let's take a look at the top 5 tax haven countries and why they're called the tax haven. At the end of the video, we will know about the astounding differences between the tax rates that these countries offer as compared to high-tax jurisdictions. Just before that, you should know what tax haven means. Tax havens are locations where business owners and other extremely affluent persons keep their money in offshore accounts for tax avoidance and other purposes. These tax havens, also known as offshore financial centers, OFCs, are often small, low-tax jurisdictions in isolated areas such as Caribbean islands. In these areas, wealthy individuals frequently keep their money in shell businesses and anonymous entities. We rank these countries in ascending order using the latest Financial Secrecy Index, FSI, report compiled by the Tax Justice Network, TJN. TJN is a well-known international network located in the United Kingdoms that advocates for and addresses international tax and financial regulatory issues. Based on the FSI value of each jurisdiction, here's our ranking of the world's top offshore tax havens. Number 5. Luxembourg. Luxembourg has a well-deserved reputation as a tax haven, thanks to its long-standing appeal to firms and affluent individuals dating back to the 1960s. Luxembourg rose to prominence as an offshore financial center for European bonds, making it a popular choice for entities looking to issue debt. Luxembourg, with an FSI score of 804, has a territorial tax regime that makes it an excellent tax refuge for offshore corporations. Non-residents and foreign entities are only taxed on income earned in the country. Luxembourg's tax environment has allowed numerous multinational enterprises to reduce massive tax bills, leading to accusations that the country hosts 55,000 offshore companies and facilitates tax evasion. But the question is, what tax incentives does Luxembourg provide to businesses? Luxembourg tax perks for businesses have played a significant role in recruiting many enterprises and continue to do so. Luxembourg has a progressive business tax system. Individuals with a total taxable income of up to 175,000 euros are taxed at a flat rate of 15%, while those with a taxable income of more than 200,000 euros are taxed at a 17% rate. Moreover, Luxembourg's VAT rate is separated into 4 portions, which are among the lowest in Europe. Number 4. Hong Kong. Hong Kong ranks 4th in the Financial Secrecy Index, with a global FSI value of 927 and a global FSI share of 2.73%. It is also one of the most popular tax havens because the local government promotes foreign investment. Corporate gains made outside the territory are tax-free. The jurisdiction is also known for its ease of doing business and welcoming attitudes towards foreign investment. Hong Kong's business boom, a haven for entrepreneurs and investors. Hong Kong's favorable tax policies make it an appealing bank destination for wealthy individuals. Unlike many Western countries, Hong Kong does not tax money produced outside of its borders. Residents receiving wages in the region face low-income tax rates ranging from 2% to 17%, while corporations pay a competitive tax rate of 8.25% to 16.5%, depending on profit levels. Most importantly, Hong Kong has no tax or capital gains, interest, or dividends. High net worth persons with financial assets in Hong Kong also benefit from no net worth taxes or public benefits tax, which are similar to Social Security tax in the United States. Additionally, individuals who do not have a bank account in Hong Kong can enjoy tax-free shopping sprees because the region does not charge sales tax on purchases. Number 3. Singapore. Singapore secures a 3rd position on the list with a whopping FSI score of 1,167. But what made it achieve this status? The fact that sets it apart from other tax havens is its favorable business environment for both residents and non-residents. Reasons for businessmen to invest in Singapore. Offshore enterprises in Singapore benefit from a range of advantages, including total exemption from corporate taxes, allowing the company's funds to be dedicated solely to the development of business operations. The confidentiality and privacy of crucial company information, including financial details, are maintained as such information is not publicly recorded. This commitment to confidentiality is paramount in safeguarding company operations and processes. Furthermore, Singapore facilitates offshore banking, enabling business owners to open bank accounts for trading in offshore forex activities. Notably, the absence of currency control in Singapore means that there's no restrictions on currency exchange operations within its regions, allowing for unrestricted movement of money from this jurisdiction. Number 2. Switzerland. Switzerland, with an FSI value of 1,167, which is the same as Singapore but with a 70 out of 100 secrecy score, beats Singapore. Switzerland has already established itself as a tax shelter for wealthy European entrepreneurs who had made their fortunes during Europe's post-World War I rebound. It is a popular business destination due to its competitive corporate tax rates and effective tax processes. The country's decentralized system allows cantons, which are Swiss states, to compete for favorable rates, with the federal corporate tax rate set at 8.5%. When combined with local taxes, effective rates range from 12% to 21%, making certain cantons, like Zug or Lucerne, very appealing. Switzerland's tax system is noted for its efficiency, clarity, and quick decision-making, which provide businesses with confidence through processes such as tax rulings. The country's currency, the Swiss franc (CHF), is considered a safe haven currency, known for its stability and resilience in times of economic turbulence. This provides businesses with a secure financial ecosystem for conducting international transactions and mitigating currency risks. All in all, Switzerland's strategic location in the center of Europe provides great access to worldwide markets. Also, it has continuously ranked among the top countries in terms of competitiveness and ease of doing business. Number 1. USA. The country that secured the top position offering the most tax haven environments all over the world is none other than the United States, with a whopping FSI score of 1,951. It has emerged as a new global tax haven, surpassing the Cayman Islands and other well-known tax havens because of its robust financial industry, competitive corporate tax regime, and attractive business climate. Several U.S. states, including South Dakota, Nevada, and Delaware, are emerging as major challengers to popular offshore tax havens like the Cayman Islands, Bahamas, and Malta. They are also perfect venues for international investors seeking to conceal their assets from tax authorities. According to Business Insider, the United States is also not a participant in the Common Reporting Standards. Mark Hayes of Global Witness said, "The U.S. is one of the easiest places to set up so-called anonymous shell companies." The United States, particularly states like Delaware, Nevada, and Wyoming, is known for having permissive restrictions for establishing shell firms, which compete with traditional tax havens. Delaware's corporate-friendly regulations, which allow many enterprises to establish their headquarters at a single address in Wilmington, have resulted in the creation of over 1 million corporations. Limited liability companies, LLCs, are popular in jurisdictions such as Delaware because they are simple to operate, require little oversight, and do not require sales tax. The United States has been classified as a secrecy jurisdiction, offering a sanctuary for anonymous shell firms. In comparison, individuals in tax havens pay lower income tax rates, ranging from 0% to 20%, as opposed to higher rates in non-tax haven countries, which can reach 40% or higher for high-income earners. Moreover, Social Security contributions in non-tax haven countries can range from 5 to 15% or more, whereas tax havens may have minimal or no such contributions. Because of all these reasons, now you know why rich people opt for tax haven countries when it comes to saving money. By the way, what is your take on tax haven countries? Share your thoughts with us. Also, please like, share, and subscribe to the channel for more in-depth discussions on global financial dynamics. Thank you for watching, and I'll catch you on the flip side.